What's up, everybody? You are listening to Come On Man, a 3% Man podcast. I'm your host, Paul Bauer, and I am on the road to being a 3% man just like you. If you're new to the show, this is a podcast for fellow students of Corey Wayne's book, How to Be a 3% Man, and for men who just want to be better in general. We talk about dating, gaining wealth, being happy, and using the law of attraction to get everything we want in life. What's up, brothers? We're back with another week of knowledge to pour into your ear holes. Be sure to like and subscribe, and if you're watching on YouTube, hook a brother up and hit those notifications. All right, much like last week, I have a good purpose/wealth/investment episode with 3% brother from Queens, New York, Evan Gary. Evan and his partners are real estate investors, and they currently own 6 rental properties near colleges in New York. We talk about how investing in real estate is quite possibly the easiest method to gain wealth relatively quickly. We also talk about other investments like stocks, mutual funds, and cryptocurrency, and how investing for the long haul is the smartest way to go because solid investments trend upward over time. We also talk about how too many people react to their emotions, and smart investors are naturally contrarian. You know, buy when everyone else is selling or sell when everyone else is buying. If you're interested in getting into real estate, this episode is a can't miss. I'll bring you that conversation right after this. All right, this week I have Evan Gary from Queens, New York, 3% brother. How are you doing today, man?
Everything's going well, man. Going well.
So before we get into this, so one of the things that we're going to talk about, well, primarily what we're going to talk about today is real estate and investing. But since you are a 3% man, you're like, we got into contact on the 3% Man Facebook page. I was curious, how did you find Corey's work and, you know, subsequently joined the 3% Man Facebook group?
I found his work after a breakup, like most of the guys on the group. Yeah.
All
So
of
like
us.
I was like reeling over a breakup, miserable, not knowing what the hell to do, and furiously typing on YouTube, how to get an ex back, no contact, what to do this, what to do that. And he showed up, his bald head, and I started watching his videos, and like everything started clicking. It all like stuff that I'd done before that worked, stuff that I did before that didn't work. He explained it, and then that's when I got the book and started reading the book and passing the book on to friends. And yeah, that was a couple of years ago, 3-4 years ago when I found him, and it's been great.
How many times have you read the book now?
I've read the book maybe 5 times now.
5 times. Okay.
5 times.
It's a solid
Yep.
amount. Solid amount.
It's not 10 to 15, but it's 5. You know.
Yeah.
It's enough for me to remember a good amount of it.
Yeah.
You know? So.
Are you planning on reading it again anytime soon, or?
Yeah. So the way that I take in information, at least, is I can't read it like back to back. I have to give it at least a couple months for me to implement things, and then for me to remember certain things from the book and implement that in real life, and then go back and read the book again. And it's like, oh, aha, that is what I did wrong this time. So that's how I implement when I read things. Like I read Superior Man a couple times,
Yeah.
Corey Wayne's book 5 times, a couple other books various times throughout the course of months, years, whatever it is.
Yeah. I can't listen to it back to back either, because it gets just so boring that you don't even want to listen to it anymore. And it's it's counterproductive. So I like to break it up with other books and stuff like that. A lot of it is sort of what we're going to talk about today. Is like, I like to read like finance books and like real estate and, you know, just wealth building type books, you know, like investments and stuff like that. So
Awesome.
So yeah, I was curious about that. So how we sort of got into contact, because you and I don't really chat so much on the page. Like I chat with certain guys on the page like all the time, and other guys I rarely see comments, and so I don't know. But you popped up because I posted a video I made about a book that I'm listening to now, an audiobook called The Millionaire Fascinated by MJ DeMarco, and it's a really good book. I'm almost done with it. But in that video, I was basically saying how, you know, MJ DeMarco was shitting on what he was calling the slow lane method of building wealth, which is essentially like the same thing as Dave Ramsey teaches, you know, where you it takes like your whole life to do it, but you basically invest in 401ks and, Roth IRAs, and you're able to retire wealthy. I think that for most people, that's, the pretty typical way to go, if you're somewhat money literate. So I just didn't like how he was shitting all over it, but you made a very good point in there as far as like the foolproof method to building wealth over the long term is through real estate. Right.
Yep, absolutely.
So, and the funny thing is, MJ DeMarco in the book, actually, when he finally stops bitching about the slow lane methods of gaining wealth, he eventually starts talking about various ways to get into the fast lane. And like the first thing that he recommends is real estate. So he says like real estate is probably the easiest way most people can build wealth fast. So he agrees with you on that. So let me ask you a question then. How did you get into real estate?
So where I went to college, there was a bunch of off-campus housing, and I lived on campus for a year or two. And then I wanted to go off campus, live with some friends, do my own thing, not have to worry about RAs and this person and that person bugging us. Mm-hmm. So I found someone who had an off-campus house near there, and I lived in there with a couple of my friends, and we split the house with a sorority. So there's 3 of them and 3 of us in the house. And once I got in there, I started to realize how much this guy was making on us, because he was charging us by the room as opposed to like one fixed price. And this was when I was 20, and I was like, you know what, this would be an awesome thing to get into. Like, these guys are making some real cake. And a couple years went by, and I went back when I had some more money saved up with a friend to go look at off-campus houses to do the same thing that this guy was doing. Yeah. And for whatever reason, it fell through. I was maybe 24 at the time. I was a little young. It fell through. And then fast forward 3 or 4 years, I made the commitment with 2 of my partners that are partners now and / best friends that we're going to start a real estate empire, one house at a time. And so this happened when I was 27. And we got in touch with realtors that we know that run that area in terms of off-campus houses. And, we bought our first house, second, third, fourth, fifth, and now we're almost in contract for a 6th. And I could go into all the details on that if you like.
Got it. Yeah. Well, we'll get into that. So, so you buy houses and then rent them out to students, right? Like to tenants.
That's our niche.
Okay. So you're not like buying and flipping. You're buying and renting them out.
So we actually did do a flip a year and a half ago.
Okay.
Where we actually lost money on. We lost about $15K on that flip, and I'm happy that I'm not happy that we lost $15K, but I'm happy that we only lost $15K, because we could have lost a lot more. We got lucky with a specific buyer, but we learned so much from doing that one flip that for our future flips, which we will eventually do again, we're going to kill it because we just know what to do now.
Got it. Okay. So why'd you lose money on that? Was it did the market drop, or did you get like put too much into like fixing it up, or what?
So I have 2 other partners. One of them is a general contractor by trade. That's what he does for a living.
Okay.
And so we went into the flip, and he's a very high-end general contractor. So everything he does is more on the expensive side. He wants it to look nice. This finish, that nice finish, this kind of marble countertop. And what we wanted to make this flip, a high-end flip. The problem was it wasn't in necessarily a high-end neighborhood worth it for a high-end flip.
Yeah. Okay.
So yeah, we put a lot of money into the flip. There was also some things that we didn't realize that we were going to have to fix, things behind the wall, stuff that you can't see on just a basic inspection. So that was a big learning experience for us, because we put too much money into the actual reno.
Yeah.
And we got a little bit less than we thought we were going to get on the sale. And then once you factor in all the closing costs and the realtor fees, and especially in New York, they're pretty damn high, we ended up in the negative. That's just how it happened for that specific flip,
Yeah, but it was a good learning experience.
Hell yeah.
So it's funny that you talk about all that stuff, because I just had another 3% brother on the page on the podcast named Matt Shepard, and he basically does the same thing. He's a self-made millionaire, and that's what he does. He's a general contractor by trade, and he'll buy and flip houses, but he does all the work himself. And he's been doing it for so long that he knows like the market. He knows how much to put into a house. He knows if it's worth the investment or not, that sort of thing. And then he also buys rental properties. So it's a very similar story. So I thought it was funny that like I'm having you guys on back to back. People are going to get sick of real estate here pretty soon, or maybe they're not. Maybe they're all going to jump into it.
I hope they do after this. I really do.
So is real estate like all you do, or do you have other sources of income right now?
So by my trade, my profession is I'm a partner in a home improvement company.
Okay.
We specialize mostly in painting, flooring, doors, moldings, stuff like that, like surface level repairs and renos. We don't really necessarily get into the hard carpentry kind of stuff or like full demos and all of that. So that's what I do. I do sales, right? So I go into different people's houses and, they call my company along with a couple other companies and they ask me for estimates on doing this, painting this whole house, redoing floors here. And I give them an estimate. I try to get them to go with my company. I sell them to go with my company. And I run a specific territory in New York. And, the company itself is, based all over New York and the tri-state area, New Jersey, Connecticut, all that.
Okay. Is this your company then?
I didn't start the company, but I'm a partner in them now.
You're a partner. Okay.
Yeah.
I was going to say, are you like a serial entrepreneur or something like that?
Not yet.
Not yet. I saw something I thought was actually pretty genius. Cause I was looking at your Facebook page and just kind of getting in preparation for this. I noticed that your company is now also doing COVID sanitization or something like that.
Sanitation, yeah.
Sanitation, yeah.
Now you're confusing me.
Sanitation, yeah. So I think that's genius because that's one of the things like MJ DeMarco sort of, talks about in the book as far as like you need to find a need. And right now there's a lot of people that are like paranoid about COVID and they want their houses, to be completely sterile, which I think, my personal opinion, it's kind of silly, I mean, there's it's going to be impossible to be that clean all the time. And you're eventually going to catch it anyway. So it's like, I feel like herd immunity needs to sort of kick into gear. We didn't do all this stuff with like the flu and stuff like that, but there's plenty of people that need it or they want it or they think they need it. So that's a perfect business opportunity.
Yeah. It's funny because before the CDC came out and said that it's very unlikely that you're going to get corona from surface touching. Because at first they said you could get it from surface, from airborne, from this, from that. And so the business was doing really well at that point because everybody was freaking paranoid.
Sure.
And then once the CDC came out and said it's very unlikely that you're going to get it from touching surfaces, business kind of went like,
Okay.
So that was just one thing that the partners thought, hey, this is actually a really good business. Let's start it up because we're not really doing any painting right now because everything's closed off, it's quarantine, but we can do this. And it did work out for a good amount of time. But now as vaccines coming out and everything's starting to take shape slowly, it's going to kind of fall into the dust sooner than later,
Yeah. It was a good thing to keep the business afloat then for a little bit.
Yeah, for sure.
It's like how Coors Brewery, right? They, during Prohibition, they stopped making beer. Well, they stopped making beer. I'm sure they kept doing it during Prohibition, but
yeah,
they allegedly turned their brewery factory into a textile plant. And that's what kept them afloat during Prohibition. I don't know. It's smart. I feel like smart business owners will figure out ways to keep business going, and bad business owners are going to fail. You know?
Absolutely. That's the mindset. That's exactly. Yep.
So another thing that you posted in the original post where I asked you to come on the podcast, you said about real estate, never has it gone down over time. It only goes up. And I was thinking, well, 2008, 2009, it went down pretty fucking hard. Cause that was the first time I was able to afford a house. I lived in San Diego at the time. And at that time, a fucking 2-bedroom shack, was like $500,000. And I'm like, why is everything so expensive? There's no way I'm ever going to be able to afford a house in the town I live in. And then the market totally shit the bed. And I was like, oh, look, everything's affordable now. was able to buy my house, but it did eventually come back up. And I think that's sort of where you're going with that, right? Like
Exactly.
it'll dip, but it'll eventually come back up. And when it did, that's when my now ex-wife and I, we sold, and we made a really decent profit on that house. So I can see where you're saying with that. And I think that the same thing can be said too about the stock market. You know, if you look at like in 2000, like the .com bust, right? Like stocks were going down or going up, and then they just totally crashed. But now they're up way above where they were even then. And then same thing in 2008, you know, a lot of like the stock market, you know, tanked, but now it's even higher than it was in 2008. So, I mean, it trends upwards, you know, everything sort of trends upwards at the end of the day. As long as you stay in the game long enough, it'll eventually come back up.
Exactly. With stocks, it's obviously, you know, there's different levels of stocks. There's like the penny stocks, the blue chip stocks, and everything in between. The blue chip stocks obviously are the ones that, you know, they could go down a little bit, they could go up a little bit, but over time, the bigger companies, they're always going to go up. Even if they merge with this company, with that company, they always go up with stocks, you know. The penny stocks are kind of just like all over the place, you know. Since COVID started, it's funny because since COVID started, there's been so many new day traders that have come out of nowhere because they're all out of work. So they say, hey, let me, you know, start day trading, and that's all good and fancy, but half of them obviously don't know what they're doing because they're constantly going back and forth. And when they see that their stock like plummets down, it's time to sell, you know, like they get very scared, very emotional decisions. And with finances and stocks and mutual funds and real estate, it's just, you're not going to make money if you operate based out of emotion, you know?
Yeah. I personally think that guys that are day traders, it's a fool's game. It's a fool's game. It's like you're basically gambling. Every day you're buying individual you're buying individual stocks. You're okay, this one, I think this one's a winner. I think this one's a winner. And then it drops, you know, and then you're like, oh shit, that one, I lost money on that one. It's a lot like cryptocurrency. A lot of people want to invest in crypto, and I dabbled in it a little bit, but it's so fucking volatile that I'm like, I'm getting out. So like when I got into it, it was this is when I was first like learning about investing, you know, and that's where I learned about, you know, the emotional aspect of investing. And I've learned that you have to be a contrarian when it comes to investing. Like if everyone's talking about stock, it's going up, it's time to get in, that's the time to sell. Because that's where like it's going to climb and get to a bubble, and then it's going to drop, and then and so all those people are buying at the top of the market because that's when it's like everyone's getting excited about it. But when people are like freaking out and stuff like that and the market's going down, that's when you really kind of want to look at maybe buying, because that's it's the whole idea of buying low, selling high. But even then, that's like, you know, you got to take like it won't work with day trading. You know, you can't, I just feel like you can't time the market perfectly. So the best time to get in is when everyone's like freaking out about it. But then you need to stay in. You just need to stay in because it's going to go up and down. But crypto goes up and down so drastically. Like when I finally got in, I think it was like around 20 grand a Bitcoin. And then it crashed like all the way down to like $3,000 a Bitcoin or something like that. Like that's a huge drop.
Yeah, that's crazy.
And so
do you think Bitcoin is going to be the currency of the future?
I don't know if it's going to be the currency of the future, but I feel like blockchain technology definitely is something to invest in, you know, but not in the form of cryptocurrency.
Right.
I feel like people can use it for all sorts of things, like data storage, like secure data storage and stuff like that. And if you invest in software companies that are using it for that, I feel like that's a better investment than investing in cryptocurrency specifically. So yeah, I mean, what's his name? Rockefeller used to say that the way to make money is to buy when blood's running in the streets, and it's the same idea. Like when it's all crashing and everyone's like, oh, this is bullshit. So, it's at the bottom of the market. That's when you want to get in.
Hell yeah. That's right.
That's when you want to get in. But so when I was buying at the top of the market, I bought when it like dropped all the way down to like 3,000, 6,000, stuff like that. But it was fluctuating so much that I finally just stopped putting money in it. And I was like, when it gets back up to like 25,000, I'm gonna pull it all out and put it in something else.
Mm-hmm.
But you definitely don't want to sell at the bottom, because then you lock in all your losses.
Yeah, absolutely.
And I think the same goes with real estate. Like, people that bought their houses, sort of top of the market right before the 2008 crash, if they just waited, 10 years, or, if they could afford to wait 10 years or 15 years and just held on to it, they could have eventually sold and got their money back. But a lot of people just were like, oh shit, I'm upside down. And then they're all trying to, oh, someone's trying to call me. I don't know why.
You're a popular guy.
I guess. Yeah. But yeah, I mean, people, what was I saying? So like, yeah, people, if they had just waited, they could have got their money back, from the houses, but instead they're just like, oh, I'm upside down in it, I'm going to short sell or whatever.
Yeah.
Yeah. So I think
it's kind of happening right now in a way as well.
Yeah.
At least in New York. So the amount of people that are moving out compared to moving into the boroughs, the city, is extraordinary. There's so many people that have just had it, especially with everything that's going on with COVID, that they're completely moving out of the city. And so you have these landlords that have absolutely nobody to rent to, both commercial and residential. And so they're kind of screwed. So they don't know what to do, because they're cutting their rents in half and all this, and nobody's biting. Nobody wants to rent. So these landlords are selling, and they're selling at a lower price. Okay, this is residential and commercial, but especially commercial, especially landlords of restaurants and bars and all that. I'm sure across the U.S. they're going. So many bars and restaurants are going out of business every day.
Yeah.
But it's a similar situation with COVID as with 2008.
Yeah.
Not as much as 2008, but similar.
Yeah, I mean, a lot of that stuff in 2008, it's like, I feel like the whole COVID instance has created its own crisis,
Yeah.
Whereas like the 2008 crash, that was done because of greedy investors, selling, shit loans to people that totally couldn't afford it. So, so yep. It's a different situation, but yeah, it's the same thing. Like, people can't afford it anymore. And so they're just like walking away, and yeah, it's definitely causing an issue. So, I mean, but then, so if people are doing that and they're selling lower, is that like a better opportunity for you then to like pick up some new real estate investments?
It's a better opportunity for potential buyers that are patient and wouldn't mind holding the property for at least a couple more months until everything settles out, maybe 6 months, a year. I don't know. Who knows when it's going to settle out. But it's for that landlord that wants to be patient and pay his mortgage out of pocket pretty much until he gets the right tenant in there. Does it affect myself and my two partners? Not really, because we are in such a niche market that works for us, that in fact our properties have appreciated in this market that we're in right now. They've just gone up.
Well, that's good. So yeah. you talked about mortgages and stuff like that. I'm assuming that you and your partners all have loans out on these properties, and you're paying them back from the rental revenue.
Exactly.
Do you have a contingency if for some reason, like, you have all these properties and you have no renters? Do you have an issue, like a contingency? Do you guys have money saved up that you guys can afford all that, or what would happen in that situation?
So in order for us to even get the mortgage in the first place, and this is partly due to the 2008 crisis, the banks, they are so stringent on lending now.
Yeah.
And we buy them as an investment property, which means we have to put at least 20% down.
Okay.
So the banks won't lend to you unless you have at least the minimum 6 months of mortgage payments for that particular house saved in your account, and they will require proof of this. Okay. So we have 6 months times the 6 houses that we have in our account already. Plus, we all have other sources of income. So God forbid, where we are, every single tenant just left, we're good. Yeah, for a specific amount of time, we're good.
Okay. Okay.
Hmm.
And the reason why I bring that up is because, like, I am a big fan of the Dave Ramsey method. And are you familiar with Dave Ramsey or his
I,
books or anything?
I've watched a couple of his videos. I believe he doesn't like debt. He doesn't like, right?
He doesn't like debt specifically, though. If you read Total Money Makeover, and his Financial Peace University, but he doesn't like it because he was basically doing sort of the same thing that you're doing. He made all of his millions in his 20s by through in real estate. He was buying houses and flipping them and renting them out and all that stuff. And he ended up having like so many loans out on so many properties. And then, like, I think the story is that the bank that he was getting his loans from like sold or something like that, and the new owners of the bank decided to call in all of his loans at once, and he couldn't afford it, and he basically, like, lost everything.
Hmm.
And so that's why he's like he hates debt, and but he didn't declare bankruptcy. He like figured out his debt snowball method to get out of debt. But yeah, that's why I was asking about that. Like, what happens if they call in all the loans at once? But you guys have 6 months of savings in the bank, or just at least so you can make payments on it or whatever. If they called it all
Yeah.
in at once, you guys wouldn't be able to pay it all at once. That would be ridiculous.
No.
I don't think most people could do that.
Yeah. No. No. Not like real. With our model, we we've been in the business for 3 years and we haven't taken a penny out as profit yet. We just completely and continually reinvest it into the next house and into the next house and into the next house. You
Nice.
know?
Okay.
Yeah.
So you you're getting the rental money. You're obviously able to make payments then on your existing loans, but then you still take some of that then and put it aside so that you can get your next loan. Is that how that works?
Yeah. All the money goes into each house has a separate bank account. And then when the tenants pay us the rent, it goes into that specific bank account. And the money doesn't get touched until we find the next house to put a down payment on.
Okay. Okay.
Yeah.
Got it.
Hmm.
Um, but at the same time, you're still paying back the old loans, right?
Yeah. Yeah. The mortgage, it's, auto generated to come out of each account every month,
Okay. Got it.
the amount. Yeah.
So the amount that you're charging in rent then, is it does that include like the cost of the mortgage plus a little bit of profit so that you guys can store it for the next house then?
Absolutely.
Okay.
So my method of invest, because there's different methods of investing in real estate. It depends how safe you want to be to how risky you want to be. With us, we are in the middle of safe and risky in terms of our method. I personally would not advise anybody to invest in real estate unless they're turning a profit on top of the mortgage, on top of the yearly expenses. If
Hmm.
there's no profit, it's not a good deal in my eyes, right?
Yeah.
Because
Yeah. I would agree with that.
yeah, so our houses, I'll just give you an example of our worst case house in terms of our profit. The house is worth about 475, 500,000. So that means as an investor, I have to put down 20% plus, mortgage fees, closing costs as the buyer. So let's say I'm into the house $120,000. Okay. Now for that particular house, I'm renting it for around 6,400 a month, 6,000 to 6,400 a month, which is pretty high for that neighborhood. But the neighborhood I don't care about because I'm renting to students by the room. So
Hmm.
I have a house there that's 7 to 8 bedrooms, and I'm renting it for 6,000 to 6,400 a month.
Yeah.
Now the mortgage on that house is going to be give or take anywhere from 2,800 to 3,200.
Mm.
So you see, that's a
That's a
monster profit
right.
for one house.
Yeah.
Um, and then you figure the yearly expenses are about 2 to 3,000. So effectively we're turning over each house at 30 to $45,000 a year in profit, and that's after mortgage, after expenses.
Got it. Okay.
So the way I think about it is if I'm putting 120,000 as a down payment into a property for an investment, and I'm making back every year 40,000, that means I can pay back my initial investment after 3 years. My
Yeah.
money will be back in my hands, and then from there it's just profit.
Yeah.
You know, that's the beautiful thing about our specific niche. And there's many niches like this across the US. There's Airbnbs. There's hundreds of other college campuses that people could buy and invest near there. People are doing it now, and there is a market for it, you know?
Yeah. Have you read Rich Dad Poor Dad by Robert
Yes.
Kiyosaki?
Yep.
It's almost exactly, you're describing exactly like what he talks about doing. Like he talks about borrowing money from, and then making profits, you pay back the bank, and now he's like, you essentially, it didn't cost you any money out of pocket. Now all of a sudden you have all this money. It's like money
Exactly.
out, it's like free money out of thin air.
Yeah. Yeah.
It's a little more complicated than that, but
It is. It depends how, yeah. I mean, what you're saying, free money out of thin air, it kind of is after a while, because the scariest part about investing in real estate, and you could probably attest to this because you own the house you're in now, right?
yeah.
Yeah. So it's always buying like the first house,
Mm-hmm.
and just like you just not knowing if something goes wrong, God forbid you can't afford it for whatever reason.
Yeah.
And then for us, at least after the first house, we got a lot of the nerves out and a lot of the kinks with how to manage the house. After that, the other houses are pretty much like business as usual now, you
Yeah.
know? Um, so that's like the beautiful thing about real estate is if you do it right, you could have the money that you initially invested back in your pocket sooner than later if you're patient.
Got it. Yeah. Some people like Dave Ramsey look at the house that you live in as your greatest investment, whereas people like Robert Kiyosaki says, no, the house that you live in is not an investment. It's
Yeah.
it's a liability, because like if anything goes wrong, it takes money out of your pocket. You got to fix it. You got, so I don't really look at my house here as an investment. It's just where I live,
Mhm.
I'm not looking to buy it to sell it so I can make a profit on it and get another house. Like I just want to live here, you know. But what you and your friends are doing, your partners, that's 100% an asset, because you're making money hand over fist with it.
Indeed. Yeah. And just to touch on what you're saying about your house.
Yeah.
Yeah, I mean, I get it. You want to just be a human being, chill out, don't have to worry about selling it, profit, this, that. You just want to live. I get that.
Mm-hmm.
Now, like you said, there's Ramsey believes this. Kaya, I can't say his name. Say
Kiyosaki, I
everything.
think. Yeah.
Kiyosaki says it's not an investment. Also, I don't know if you know of Grant Cardone. He's a big real estate guy too. No, okay. He says no, it's not an investment. To me, my answer to that question is it could be, it could not be. It depends how long you're going to live in the house. If you're living in it for 5 years and then you sell it, no, it's probably not an investment, because you're not really going to make money. You might even lose, even if it does appreciate, because your mortgage, you're paying mostly interest the first somewhat years on the mortgage.
Mm-hmm.
But if you hold the house for like 10 years and then whatever reason you want to sell it, it is an investment, because you will be making money on that appreciation and also paying off the mortgage
Got it.
instead of paying rent to somebody else for those 10 years.
Got it. Yeah. No. Okay. That makes it. Yeah. So it just depends on the situation, right?
Yeah, exactly.
Yeah. And
Yeah.
what you're doing with it.
Mm-hmm.
So you also mentioned in your post that you think you'll be able to retire in about 10 years
Right.
on this front. So what's your exit strategy then?
Our exit strategy, in terms of a number of houses that we want to have, honestly, that number is kind of unlimited. But if I'm being realistic, in 10 years, realistically, we should have somewhere between 15 to 25 houses or properties, multifamilies, or one or the other, something like that. And if that is the case, between 3 partners, it will be enough money if we wanted to retire and just live off of those profits.
Yeah. What I would imagine then is you're not necessarily retiring from the real estate game. It would be retiring from your day jobs.
Exactly. Yeah.
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 Okay.
Yeah. So right now we only have 5, 6 coming up houses that we have, and we're actively managing them. We don't have a property manager. We all live maybe 25, 30 minutes away from them. So it's not difficult for us to manage them. But once we get up to 10, 15, 20, we're probably going to have a property manager. And yes, that will take a little bit of our profits out of it, but It'll also be a lot less of a headache, and it'll also be checks coming into the mail for us doing practically nothing, you know?
Yeah, yeah. No, after a certain amount, it sort of behooves you to offload that work to someone else. The cost is worth it. You'll still be making enough profits that you know you'll be just fine. You probably won't even feel it, and then
Yeah,
you'll do less work and you'll spend more time drinking margaritas and shit.
that's right. That's it. On the beaches of Greece and Cancun.
Yeah, I think you would actually like the MJ DeMarco book, because I mean that's exactly sort of what he talks about. He's like you sort of bust your tail. He talks about getting rich within the first 5 years, but it's the same. I mean, 5 years, 10 years, whatever. It's like you bust your tail now so that you can not have to work in 5 to 10 years, and you can just chill and just that money just keeps rolling in, and it's just you don't have to do anything. Still comes
Yeah.
in.
It's very possible, but people just are get very overwhelmed. They don't know where to start. And I mean, there's a shit ton of information on the internet now about real estate, any kind of real estate. There's so much to learn that people can just type it in and learn. I mean, I personally did not learn through the internet because I actually learned through a realtor a lot of the things. We have two realtors that work with us, and they have to connect all over there. Even before a house goes on the market, they know about it. We're usually the first ones in there because they know we're serious. We don't really mess around. When we put an offer in, they know if it gets accepted, we're not going to back down. Back out. Like, we're very serious buyers, and that's our reputation. So the realtors that we love them, they're our friends now. They take care of us whenever they can with houses or whenever something comes on the market. And I think that's key to anybody that wants to get started in real estate, to find the right players in the game.
Find the right place. See, I was going to ask you that, like, what advice do you have for people that want to get into real estate? And so you want to find the right players, do some networking. And
yeah, that's huge. You go on meetup.com, and there's all kinds of networking events for real estate in the nearest city or town or whatever. I know obviously here in New York, there's all over the place where they have these kinds of meetups, and you'll also meet other people that have money that don't necessarily know what to do either, or don't have a property, and you could team up with them. I personally found my two partners, they're my best friends from college, and we all have this same mindset of where we want to be, and we all have the money to put in.
mm-hmm.
And then after a while, one of my partners has his own contact that had a couple $100,000, and he didn't know what the hell to do with it. So he gave it to us, and we invested it into real estate, and now we're paying him back on top of the mortgage a certain amount, but we're still profiting even after all that being said.
Yeah.
So I think that, like you said, in order to get involved with the real estate game, at least the best thing to do is to start networking, find the realtors and the property managers that are in the game, and they know the houses and they know the tenants and they know everything about what it is you want to get involved with, and talk to them and get to know them, take them out to lunch. And once you do that, it's a matter of coming up with the money and then finding the property. And there are a lot of properties to be had in today and yesterday, tomorrow. They're going to be there. It's just a matter of taking that first step and investing,
Got it. Do you worry about competition though? Like, I mean, I guess what would your competition be? People trying to buy the same properties, or would it be like the property owner next door that's trying to rent their place out? Like,
so yeah, it's funny you say that, because I'm happy you mentioned that, because there is competition. We are in a competitive market around where we are. There are maybe 5 or 6 other landlords that have a set of houses that are also renting to the same market as us. And so we're constantly kind of keep an eye on the other landlords and what they're doing. Some of them are demoing their whole house and building it up even bigger and better for the students to go there. Some have slumlord houses where they have to lower the rent for kids to go there. So we actually bought 2 of the houses from a competitor. He sold them to us, and it was a mutual thing, because instead of us buying a house that's not on our niche market right now, and the possibility of it getting oversaturated with our tenants, because there's only so many tenants that are going to live off campus. There's only so many people that go to college, and there's only so many people that want to live off campus. After a while, if you keep buying houses and houses and houses, there may come a point where your house is empty because everybody's already in other houses.
Mm-hmm.
So we bought these 2 houses from our competitor who already had students in there. And so we bought it on day 1 of closing, we were making a profit because we didn't have to worry about getting it rented. It was already rented. There was already profit coming in. So yeah, but there is definitely a competitive market with all real estate, especially our niche. But because we have this connect with our realtors, we are kind of like the first ones in there most of the time.
Got it. Okay.
Yeah.
Very cool. Well, this has been really fascinating, man. I think I have one more question for you, and then we'll go ahead and wrap this up.
Sure.
And this goes back to the 3% man stuff, and I ask this to everybody, but what does being a 3% man mean to you?
Being a 3% means being authentic as humanly possible, living from your core truth as a man, not listening to what your friends say, what your mom says, what that stupid show, romantic show on TV says in terms of a woman, acting from your core, living your purpose, something that you're actually, that's a cute cat.
My cat is driving me nuts. Sorry. Yeah.
So yeah, I mean, like the key takeaway from reading Corey Wayne's book is generally, abstractly, be a man, do what you want to do when you want to do it, live from your true core, live on purpose, find your purpose, find your passion, because I've been in jobs where I wasn't passionate about it, and that has affected my dating life, my social life. I just was miserable. I didn't care. And then I've been in work where I was super passionate about it, and I woke up every day like I was on fire. So that's what a 3% man means to me.
I think that's a good answer. God, Kat's over here. She's ringing her little bell. My son's outside playing with his friend, banging on shit.
You got your hands full.
Oh, it's driving me nuts. I love it when I tell my kids, hey, I'm going to be recording a podcast. I need you to be quiet. Yeah, no problem, Dad. Yeah, my friend came over. Jesus Christ. Anyway, well, Evan, I really appreciate you meeting with me today, man.
Yeah, no problem, Paul.
All right, dude. I'll see you on the page.
All right, man. Take it easy. All right.
All right. Evan, it was such a pleasure having you on the show, man. I'm really glad your real estate empire is booming for you and your partners. I also hope that what Evan shared today will help some of you on your road to wealth and prosperity. All right, guys. We'll see you next week. Thank you for listening to Come On, Man. If you're new to the podcast, I highly recommend reading How to Be a 3% Man by Corey Wayne at least 10 to 15 times. I recommend you watch his coaching videos on YouTube, and I recommend that you engage with other 3% men in our 3% Man Facebook group. Links to all of these are in the show notes. If you like this episode, please give us a good rating on your podcast platform of choice and share with all of your bros. Now go out and get it.